Yeah, morning traders. Happy Friday. If we have a look at our opening calls for Asian equities at the moment, we are expecting a positive open. We're looking for about a 0.5% gain in the Hang Seng, the Nikkei and the ASX as well. I think if you look at China tech, had a good gain yesterday. We'll see if we can see some follow through buying. I think that may support the region as we go into the final day of trade. If we have a look at sort of around the region and have a look at the news flow that we've been talking about, the Riksbank left rates on hold in Sweden. We did see the Bank of England getting certainly quite a good focus from sterling traders. We did see that essentially coming out with 6 members calling for the hold, 1 calling for a cut and 2 members calling for a hike. But generally speaking, probably the way you look at this is that they've said they've come a long way, but we're not quite there. Similar to the Fed, they sort of just push back on imminent rate cut expectations, but sort of guided to the idea that one is on the horizon. And we can see that in UK rates. If you have a look at May swaps at the moment, we've got about 16 basis points of cuts being priced in there. It's about 63% chance of a rate cut for May. So that's kind of the live meeting and sort of the default position at the moment. We've got about 114 basis points or just over 4 rate cuts being priced into UK rates by the end of the year. Hugh Pill will be speaking in the session ahead, so it'll be interesting to hear what he has to say. If we have a look at the reaction in cable, though, we did see a little bit of a pop initially on the statement, and then it sort of just pushed up to about 127.86. I think that was more just the sort of risk factor, the dollar weakness we've been seeing as equity markets rallied. We also saw European CPI numbers coming out. We saw a headline at 2.8%, a little bit hotter than the expectations of 2.7%, and also on core at 3.3%, again, just a little bit hotter than the market was looking for. I don't think Euro really looked at those numbers too much. Well, they certainly didn't react to it. We have seen Euro trade up to about a high of 108.75. Again, just more about sort of the risk that's coming in and the fact that risk is coming. We've seen dollar selling playing through. So I wouldn't say that as a Euro-centric issue at all. In the US, we've seen initial jobless claims coming out slightly hotter at 224. We saw an ISM manufacturing number, which is slightly better, a slight improvement from last month, and that came in at 49.1. New orders, expanding to 52.5 was pretty positive, although I think probably offset on a negative note by a slight pop in prices paid. But that's the 15th month now we've seen manufacturing numbers above expectations. Now, I'm not sure how much the market looked at those in any capacity. I think the equity story is quite interesting. I think if you look at rates, we've seen 2-year treasuries close pretty much unchanged, 10s down 5 basis points. If you have a look at the dollar moves, essentially we've seen the US dollar under pressure against all currencies bar the Chilean peso. But yeah, you can see here, we've seen good taking from the high beta plays. The Mexican peso, the Noki, Brazilian real has done pretty well on the trading session. Again, it comes down to this equity story. Now, I think on one hand, we have seen regional banks, being a bit of a concern. You can talk about New York Community Bank, that's closed down about 11%. That continues to find sellers. The KRE, which was down about 6.1% at its lows, closed about 3% lower on the day. So we're still seeing regional banks under a little bit of pressure, names like Zion and M&T, finding a few sellers there. But generally speaking, it's been a pretty big risk-on move that we've been seeing. Cash markets have traded up to and closed on their highs. Consumer discretionary was good. I mean, Amazon during the cash session closed up quite strong, and that's really been a good place to be. Staples have been a good place to be. 80% of stocks in the S&P closing higher, but it's been a pretty strong tape, as you can see. And you've seen really good volumes, well above the sort of 30-day average playing through. After market, though, you have seen Meta coming out with very strong earnings relative to expectations. Obviously, it's a market darling and did need to blow the lights out. It looks like it has done. The stock's up hard in the after hours. And we're also seeing Amazon, good gain in the cash session, as I say, but that's up about 5% in the post-market. Apple's come out with numbers. They've just dropped. The market doesn't really know what to do with them at the moment. It's pretty flat in the after hours as I speak at the moment. I think there is some concern about the Greater China revenue numbers. They're a bit weaker than expected. We'll see what happens when the cash market opens later on, how the market trades that one. Other than that, you've seen crude prices under a bit of pressure there. It's down 2% lower, and that's weighed a little bit on the energy sector. We're seeing a pretty heavy tape playing through. Now, as we look ahead in the session ahead, staying on the energy vibe, we are going to be hearing numbers from Exxon and Chevron. They're going to be reporting in the session ahead. And of course, it's non-farm payrolls day today. So, whether that influences rates pricing is obviously something we'll be watching. But the market's looking for about 185,000 jobs on a net basis. The unemployment rate at 3.8% and the average hourly earnings to come in at 4.1%. What do you look at? What's the market going to be more sensitive to? I would say the unemployment rate is probably going to be the one that dictates the dollar flows and rates pricing. So obviously one to watch in the session ahead.